Good afternoon, everybody. Welcome back to my channel as I adjust myself in within this circle real quick. Okay, so so this one of my first videos that I'm going to be making since being monetized. So welcome to YouTube program. Welcome to the brotherhood, I guess, right? But what I can say is that first off, like and subscribe to my channel. My channel is about investing, whether it be dividend investing, creating portfolios uh, for stocks to be able to pay your bills right now, or you can leverage my knowledge and understanding to create portfolios for investing into growth stocks, stocks in your 401k, uh, ETFs, index funds. I talk about everything. And also, soon I will be talking about crypto as well because I'm going to be investing more into Bitcoin and some XRP and Ethereum, and everybody that's in the crypto space. Hey, welcome me to the brotherhood, and for the individuals who want to learn how to buy Bitcoin, how to buy Ethereum, how to store it onto your uh, your uh, your drive, one of those external drives. What they call it, cold case, cold hard drives, whatnot. I can show you guys how to do that as well. Make videos for individuals who want to get into not only just invest into stocks but also into crypto. So for today's topic, that we're going to talk about is we're going to talk about the perfect dividend portfolio for brand new investors. So if you were to start out brand spanking new and you wanted to create a dividend portfolio from scratch, I'm going to go through 10 stocks. Got to put both hands up. Go up to 10 stocks for a new investor for them to look into. Each stock represents a particular uh, industry sector in S&P 500, so that this person will be this new investor will be highly diversified. Stocks that are affordable, have a great brand recognition within the market, and then also some will be more of an income play, some will be more of a growth play, incorporate it all together within your dividend portfolio and invest per month, and you will be able to have a juicy dividend portfolio for either using to pay your bills, to live off of, or to basically grow something to you can add on with your Social Security or your company's 401k to basically live off of in retirement. So if any of those things interest you, then come on, let's just dive into the video. So within the video, here is my dividend portfolio. I have roughly 34 stocks. I just recently just created a new position with Apple. So typically, when individuals start a dividend portfolio in the tech sector, they recommend. Also, past performance does not guarantee any future performance, and just know that this video is not recommending anything. This video is just for just educational purposes only, just for fun. So but typically, when individuals recommend for stocks for the tech sector, individuals always recommend Apple or Microsoft since the, of the long track record of growth. I have a particular tech stock that a lot of people probably haven't heard of, and if you are in the investing community, you probably have heard of it, and you probably have it in your dividend portfolio, or you probably don't. So to start out, I just wanted to show you guys my dividend portfolio just to show you that I'm actually walking the walk and talking the talk. So I'm not saying like, hey, this is how you should do it, blah, blah, blah. And you look to see like, well, he's not invested or he doesn't have any money invested to the market. And so I do. And so the first stock we're going to talk about is AT&T. Now, we do know that, yes, AT&T did cut his dividend at I think like last year or the year before last. I really uh, can't remember really remember when they deleted uh, their their um, their dividend, but this is going to satisfy having a stock in the communication sector. Now, stocks in the communication sector, it's like AT&T, Verizon, and Disney. Now, Disney just have just reinstated their dividend. So in the future, I might do a new video and incorporate Disney instead of AT&T. But as right now, AT&T costs $19.25, has a 5.77% dividend yield, and so uh, this will be not a growth play, but this will be having a stock in your portfolio more so producing income and a more shares of AT&T that you to particularly buy. If you grow, I mean, if you buy enough shares of AT&T, you can stop and just have the dividend buy more shares, and then you could just take your foot off the gas. The second stock is the stock that I was hinting at when I was talking about in the tech sector. Now, normally, individuals recommend Microsoft or Apple. I'm going to take a different stance. I'm going to say for adding a stock that's in the tech sector for your new created portfolio will be Analog Devices. Now, it's a it's a boring company. Typically, a lot of times people you might hear of Broadcom, Microsoft, Apple, but ADI, Analog Devices, is I would say is along the lines of the same tier of Texas Instruments. This is a semiconductor company. It has a 1.74% dividend yield, so it's not high. It costs $197 per share, but boy, this dividend stock has been growing its dividend for the past 10 plus years. Uh, from I could see, right here, it has grown its dividend uh, like 19 years without a reduction. And I wish it would have told me the dividend increase uh, if of its increase in its dividend. Oh, right there. Oh, it has a dividend growth streak of 19 years, and it also has an uninterrupted dividend. So this is a particular stock that has been growing a dividend for 19 years, and also been increasing their dividend for 19 years, and also has been increasing its dividend uh, for more than 10%. Now, with Apple it buybacks the shares, and it's a great appreciator, but the dividend sucks. Now the dividend uh, yield is low for Apple, and its dividend yield sucks. And so this one right here is a low yielder, but this stock right here will give you share price appreciation, and it will increase the dividend, and is very very reliable because of the semiconductor stocks, semiconductor industry. Is in cars, TVs, electronics, billboards, uh, calculators, computers. We're going to AI. We're going into an industrial age, and so semiconductors, stocks, chips, and all that. It's going to be hot, and it's going to forever going to be on the upswing. So why not get a piece of it, and why not ADI, right? For the next particular stock, we're going to focus more on the healthcare industry. Now, typically, when you look at other people's videos, they recommend like J&J, like Johnson, uh, and so I didn't Johnson and Johnson or UNH, which is United Healthcare. Now, I used to have Johnson and Johnson, and I have United Healthcare. It's a compounder, but I wanted to be different, where have something where uh, it's a staple in the investing community. It typically grows its dividend from around 10%. Has a great a dividend yield, and this right here is a stock where it costs $241.75. It has a payout ratio of 44%, and this stock right here it's been growing its dividends steadily for the past 11 years. It's a great compounder in terms of dividends, and also it has a nice share price appreciation, and is also in biotech. And we all know in healthcare, when the world goes into haywire, or whenever there's a recession or a downturn in the market, the sectors that does well are consumer staples, utilities, and healthcare. And so I recommend just to write this down and doing some research on Amgen to see if this particular stock that you like to put into your dividend portfolio. But this is stock that I would put into a new dividend portfolio, starting out if I never didn't have one. Now, this bad boy, even though it's having a rough year, it has a downturn, but this has a history of stock has a history of doing well. Is in the financial space. We are dealing with right now uh, a recession, downturn. Companies are laying people off, and so this dividend yield of a 4.32%. It's the best time to buy this stock because I want to say I know it's a dividend aristocrat. Now I don't know if it's a dividend king. Dividend kings is a stock or company that has been increasing its dividends for 50 plus years. So uh, I don't want to distract and say that this right here is a dividend king, but I know for a fact it's close to becoming a dividend king, and most importantly, it's close to being it's most definitely it's a dividend aristocrat, and it's really on the cheap side right now. The reason why it's on the cheap side right now is because of just the immense pressures of just the down markets, and this deals with markets and whatnot. And so you all know that when you deal with stocks and whatnot, you don't want to sell your stocks when it's low. You want to buy low, sell high, and so it grew its dividend by 1.7% just to uh, keep up the reputation of growing its dividend, the dividend streak. But usually it grows dividend like 10, 15, sometimes 20%. But it's right now since we're in a down market. But don't slip on Enbridge. So T Rowe Price. I'm sorry, I said Enbridge. Don't slip on T Rowe Price for the financial sector for your financial stock. Only the reason why I said Enbridge because that was the next stock that was going to come up. So the stock that's going to satisfy the oil and gas portion in this new dividend portfolio is going to be Enbridge. Now, mind you, I wrote down Chevron because Chevron has been increasing its dividend for more than 20 plus years. Chevron's a dividend aristocrat. You have ExxonMobil, which is a nice pick. I would if it was like 2 years ago, I would have put ExxonMobil because ExxonMobil was really down like 20 $25, and that was the best time to get it. 2020 with the whole you know Ovid, you read between the lines. That was the best time to buy. And then in 2021, the next following year, that's when because you know the whole America and across the world couldn't really do anything, uh, supply and demand. So reason why I chose Enbridge, which is a Canadian stock. Now keep in mind for the Canadian stock, you will have to pay Canadian taxes and whatnot, blah blah blah. But it's a 6.85% dividend yield. It's been increasing its dividend growth for like 3.5, 5%. It costs $38.15. So you can really use a lot of your money to buy a lot of shares. For me, I have roughly 40 shares of this. I plan on buying more. Uh, it's a staple in the Canadian market. It's a grower. They also invest into going green, where wind, uh, wind energy, solar energy, uh, nuclear. It's a they deal with oil and gas, but they also have pivoted into green energy. And they see where things is going, so uh, it's not stagnant, and it has it's a company that's known to be a compounder, high growth, take the back. High growth for the Canadian market. For American market, it's more so a high yield play, but I love it, and it has not let me down. I've been investing in this for the past 5 years, so I nibble on it, buying it here and there. This for the next company that's going to satisfy for the material sector for this new dividend portfolio. It's going to be EMN, which is Eastman Chemical. This typically pays its dividend like January, uh, April, I want to say August, and then November, or I think I got the last two wrong, but it pays like the first month of the each quarter. I could say. Uh, and it's just this chick stock doesn't cost so much. It has a 3.75% dividend yield. Has a safety score 85. Typically grows its dividend about 5%, which is not bad for a materials. Typically, materials, whether it's in the SP 500, ETF, index fund, it's typically is not that a lot because when you deal with materials, you deal with it's highly cyclical. So it's highly cyclical, like ups and downs, just like energy, oil and gas. Like oil and gas, when the times are good, it's good, profitable. Like like the materials and whatnot, like chemicals and all that. When it's really good, it's good. And then when it's bad, it's bad. When the materials and the price of materials go up, the inflation, all that eats into the profit of like the material sector. But this material $84.34 is not bad, right? So the next stock is going to satisfy for the real estate. So you got to have real estate exposure within your new dividend portfolio. So typically, in this sector, a person would recommend maybe AMT, American Tower, or probably the monthly paying dividend stock, which is O. But in all videos, people use O. People use O or maybe ABC, and serves right. But I wanted to create this video to give you new stocks for a new investor to to be different. Be different than other individuals who just have O. Now you can have O, or put that in your Roth IRA, or have it in another portfolio. But this is just something new. So VC property, you have exposure to the like Las Vegas. So Las Vegas Strip hotels, and this right here only costs $32.62 with a 4.78% dividend yield, and O costs roughly like 67, $68 depending. So it's roughly double this. So I want to give you something that for more bang for your buck, and then it also has a dividend yield. It says 8.3, but do it like around 5 to 6%, but that's not bad with a high yielder like that. To satisfy the consumer staple, uh, I would say either to use at Pepsi, which is a great pick, or at Mo. And so in the last screen, well, I went over a diagram of using Mo, Ultra Group. But right here, Pepsi costs $182, has a 2.78% dividend yield. I had this particular stock in my dividend portfolio for about 5 years before I sold it this year, because I saw that the concentration in SCHD, the dividend ETF, was a bit high for Pepsi. So I figured, why not, right? So that's why I bought SCHD and I sold Pepsi for it. But if you just wanted that Pepsi exposure, just buying the stock of Pepsi, it doesn't hurt as well. My favorite stock that I talk about in every video, I know you guys are probably tired of it, is Starbucks, because I'm an avid coffee drinker. I like I'm a coffee pot head. If you know that podcast with she Shazad, and man, I really don't I drink coffee metaphorically, but in terms of money, this bad boy is a money maker. I love Starbucks. It costs $104. I love it when I get it around $100, even get around 95, where when the market's like when it's bad news and it gets close to like 100 to $98. I always buy a share or two because I love Starbucks and it's a compounder. And lastly, for the industrial sector, this is the last sector for your new dividend portfolio, will be UPS. And so I had different options. I was going back and forth to either using UPS or going to use Union Pacific, which is the railroad. I've talked about that in many other videos, so I figured it to be different. And so for different, you could use you got the Stock Cummins CMI, which is a logistics and trucking company. But for this time, we're gonna use UPS, right? Because people always gonna need air freight and logistics, even with the whole uh, Amazon and all that. It's just a booming market industry that people are always gonna need their packages. Always gonna want their packages. Uh, and I own UPS because I like it. And then also I got a buddy who he works at FedEx, and it's just I'm very familiar with the industry, and so for the last screen, I saw I went through an example where if you wanted to create a goal for yourself, so now don't be alarmed. So let's say that you started in your late 20s or whatnot, 25 or 30, and you got some time that you want to invest. So I put that you start out with this portfolio, this new portfolio of 10 stocks, and then I put it right here. So you got AT&T, ADI, Amgen, T Rowe, Vici, Enbridge, set up Pepsi, I put Mo, Eastman Chemical, at Starbucks, and then I got UPS. And then right here, you can go and you can move the percentage to see, um, depending on how many shares that you have to buy of each to get you to your goal of making $30,000 in dividend income. So let's just say that if you just want to get it down just to 15,000 just to start out. You got a 401k, you got you know you got a 401k. You're going to be living with some of your Social Security if you have some, and then right here it shows you, you know, go ahead and do calculate, boom, and right here it shows you that you only need 418,000 invested, and so guess what? Imagine if you got money coming out your check going to your 401k, right? You're doing, let's say, you're doing 5%, and then your company matches you dollar for dollar up to 4%, right? And so you're doing 4 or 5%, right? And then also you got this portfolio that you're putting $250 to maybe $400, $500 a month, which is only $250 per check, which is biweekly. So you're doing that, and then let's say you're starting out at age 30 or 35, right? So then you have 30 years that you are constantly feeding your portfolio, and then guess what? There's gonna be times where you may sell a house, you may get commission, you may start a side business, a new YouTube channel where if it's finally starting to pay you maybe $100, $200 extra a month once you get to that point, or you're doing Uber Eats or Grubhub or Uber, and you're just doing the gig economy, and you start making more money, and you're able to put an additional $200 on top of the $400, $500 that you're putting. You will get to your goal, and you spread your money out into investing into AT&T, ADI, Amgen, T. Rowe Price, Vici, Enbridge, Mo, Altria Group, and then EMI, EMN, which is Eastman Chemical, Starbucks, and UPS. And just know that the stocks that have a higher dividend yield, like Mo, Enbridge, and AT&T, it's gonna take less of your money, put it into those to help reach those goals because it has a higher dividend yield, and on top of you letting uh, the dividend grow per year, and then you also reinvest in the dividend to buy more shares, you'll be able to hit your goal a lot faster than not starting at all. So hope you guys enjoyed this video, how I would structure a new dividend portfolio for a new investor if they just wanted to start out, to give you just to give you some examples and a new way of thinking outside of just Apple, Microsoft, J&J, just the common stocks, and give you stocks that you probably haven't heard of, and go through an example of how investing into these stocks, how uh, when you start early, you're able to comprise a dividend portfolio that's paying you 15, 20, $30,000, and that helps on top of you investing into your 401k if you have a Roth IRA, if you have rental property, etc. So if you enjoyed this content, like and subscribe to my channel. Uh, Watch my video all the way through. I'm going to create different segments so that you can filter through the videos of information that you need. And I hope you guys enjoyed this lovely content. Thank you guys.